Welcome to thestockminute.com. I'm Brian Johnson, and we saw kind of a flat finish to the day. Not much more than what we expected to see. I really did. Here's one thing that we didn't get, and that was I expected to see a little bit more trading available to us during the course of the week. My gut was kind of a Tuesday, Wednesday type thing. We did see some movement during the week, but nothing really major. As you can see, just the market struggling to go anywhere, and we ultimately ended up in a trading range right here between, I'm going to call it 518 and 618 here on the Dow. I think that's a pretty fair assessment of what we did and where we went and what we held by the time it was all said and done. Into the end of the year, the bulls just didn't want to give up what they had already taken for the month of December and really for the year. Now keep in mind, we finished the month, finished the week, finished the year, which means Monday is a brand new year, a brand new year of trading. So happy New Year to you all. Should be a fun night. I'm having some. My son is 19 and he's having some of his friends over, and we're gonna have a little get together here, play some ping pong and just games and stuff all night long. So I'm looking forward to it. Ought to be a good time. Anyway, back to the markets. Into the new year. Now we may see, within January, we'll definitely see, I think, a pullback coming maybe early into January. It really depends on how quickly the markets decide to move once we get into the new year. It doesn't usually happen that we come back on like Monday being the beginning of a new year and all of a sudden we're down 50, 60 points. That isn't very common to see something like that. It usually slowly works its way into that kind of a move, even as extended as we are. But the bulls did a good job holding it up into the end of the year, making everybody should be very happy with their returns over the course of this particular year. Try to erase from their minds all the losses that they sustained back in like '08 and whatnot. And by all means, it really did chew away a lot of that by the end of this year. So, same thing: move up, move sideways, move up, move sideways, move up. We did just move sideways. It's one of my other ideas. And this is what played out this week. So the Dow overall for the week, you can see really going nowhere. 1, 2, 3, 4, 5. Starting with this red candle, which was Monday, we went nowhere. We had a last week Tuesday, Wednesday, Thursday move up, and then this week Monday, Tuesday, Wednesday, Thursday, Friday sideways move. Total of about 100, 150 points probably up and down all week long. Once again, bulls just trying to hold it tight. So NASDAQ doing the same. A little bit more weak than the rest of the markets themselves. Certainly the most weak overall for the day. Not only on the NDX, but on the composite or the NASDAQ composite as a whole. But still nothing really broke here, guys. We're still holding within the trading range. So yes, it has been a little weaker than the rest of them. But until we start to break these lower levels, I'm, like I said, not going to get too much more bearish on this. Let's just talk about what we saw for the week. And that was a sideways move as we did in all the rest of the indices. Very boring trading. This is why I try to turn your attention towards individual stocks as opposed to the ETFs and the indices, because there just wasn't a whole lot going on. By the end of the week, we did manage to keep above the 20-day moving average by a couple of points. As long as this moves sideways, it's still good for the bulls for the time being. Got to break these lower levels here. Then we're going to start talking about that bear pullback. NASDAQ weekly, same type of thing. Little teeny tiny doji candle, which is about what we expected to see coming out of the end of this week. This one ended up red, so now we're still in a high base, maybe even a pullback type of a formation. But for the week overall, really nowhere. Down 12 points, about 0.5% for the week, but you can see the slow move. Really moving 26, 20, 28 points, about 30 points really, high to low, all week long in the NASDAQ, meaning that no trading was going on. Portfolios, hedge funds, you're just not going to make a big move coming into the end of the year. Why would you? It doesn't make any sense, really, to do that. And with the tax credits being extended, you're going to get those same tax credits next year. It just doesn't really make any sense for them to make any major moves coming into the end of a big year like this. SPX 60 minutes, same type of a thing, wandering sideways all week long, finishing right and actually just at or below the 50 period moving average here. But you can see where now these are starting to close in on one another again. It is still moving sideways. Here's that sideways move, here's that sideways move, and up here's that sideways move. Been very tedious for you longer term investors to watch this thing grind its way upwards, but upwards it has been. And once we broke the 1227 area back in December, we've managed to pull 30 points out of the market. That's not bad for a month. I gotta say, it's not overall. It's not anything special, but it's not anything bad either. If you're bullish on this market, you can see there's nothing broken from a bull side up here. Not yet. We start breaking down below these 20-day moving averages. Now we're talking. We'll talk more about that this weekend, but overall for the week, flat, everything sideways right here. A high and a low of about 11 points. That's it. 11 points all week long. We had been seeing 10 points in a day, 12, 15 points in a day. Big moves, nice, consistent moves to the upside. And we're still moving up, point being just not going anywhere right now. The market is so tired. It would be so healthy for the bulls to see a pullback here. Really would. A VIX was up, market was down. Yeah, this is kind of an even and or right here, but you can see for the week we did actually, go figure, managed to hold this upper blue line at the end of the week. Now we saw that happen over here as well. This big white candle held, then the following week it came crashing back down. Are we going to get the same type of response next week? Anybody's guess. We'll wait and see. We are much, much deeper into this formation now, so maybe we do actually hold this time. This should make for some very interesting moves next week if this will just stay here. And as we can see fear move back into the markets, we will see that pullback happen. Apple 60-minute was down $1.10 today. You can see it just wandering its way around, looking at that 320, 315, 318 area. None of those areas were broken today. It did manage to hold this 20-day. Wanted you to keep this on your charts. Told you if it got back down into this to watch it very closely. That was at 321.91, so right around 322. And you can see by the end of the day, it absolutely held it. Now, this just looks, right now, for the time being, as just a lazy pullback in the markets itself. Kind of wandering its way back, and as long as it stays up above this 320-ish area, I still got to be neutral to bullish on Apple for the week, going nowhere. This has been a terrible stock to trade lately because it's not going anywhere. 1, 2, 3, 4, 5 weeks of basically nowhere. 4 weeks for sure. Still holding above the 320 area, and as long as it moves sideways, got to remain more neutral to bullish on it. FAS, same thing, wandering sideways. It was up 11 cents today on the daily here. You can clearly see what we're looking at. I told you this just looks like a pullback at this point. Next week, let's look to see if we can blast above this 28.30, 28.40-ish area for entries, and then back below 27 coming into next week, and see if we can complete maybe what could be. This could be a cup and handle. Like I said, I'm not sold on its position, but it is what it is. Let's just see if we can get any further pushes above that next week. FAZ did the exact opposite then, still playing within this channel here. Obviously no breaks above my areas of 10 or 10.50 to the long side, and no breaks below all week long this 9.30-ish area. So very difficult trading once again in FAZ. We have had some decent times to trade, but overall these 3-time ETFs have not played out all that well and have not given much movement one direction or the other. Makes it very difficult to trade these. You get your hand slapped up trying to play these things down in these areas. Be very, very cautious within these 3-time ETFs. Now, we're done with the year. We're done with Christmas. It's all over with. Okay, now we got to start looking ahead towards the first earnings season, and on. And keep in mind, now that Christmas is over, people aren't going to be working as much. People are going to lay off their holiday help, so we may see some changes to the job numbers and all this other stuff that happens year after year. It's the same stuff, different verse. And coming into January, we are very, very extended. Very extended. I would expect to see some pretty sizable moves start to hit first couple months of the year. We are going to be ready for those. I'm going to be talking about that in this weekend's video. So I hope you guys have a very, not only a fun first, but have a very safe first. The last thing you want to do is end up in a hospital bed or something stupid. You guys will get enough commercials about this, and I don't need to bother you about it, but everything in moderation. Really, it's just not worth it. I want everybody back at their trading desk on Monday, ready to work into this new year of trading. I don't want you in a hospital bed going, man, I wish I had access to the internet right now because I just missed a huge move that Brian was talking about, and I can't do anything about it. All right, so be safe, have fun. We'll see you again this weekend, and let's get ready for next year's trading. Bye.